Traders, if you're finding yourself stuck at break-even results, despite having a profitable strategy and despite trading for months or even years, this video is for you. I'm going to show you exactly how you can break out of the boom and bust cycle in this video. I'm going to show you the psychology behind the boom and bust cycle. I'm going to show you that it's your own mindset that's keeping you trapped in break-even results. And I'll show you the exact steps that you need to take to be able to break out of the boom and bust cycle to ensure that you can have consistent profitability, you can have a growing equity curve, and you can start to scale up with funding and make more and more money as a trader. So let's get into it. What I'm going to do is I'm going to bring up the iPad and I'm going to do more of a free lecture here where I just share my thoughts on the boom and bust cycle. 8 years ago when I got into trading and started to study the psychology and understand the psychology, I was introduced to the boom and bust cycle very, very early on. And then when I went into my studies in psychology and human behavior, I realized and I learned that the boom and bust cycle isn't only about the markets. There's a mass psychology that understands the boom and bust cycle. And the boom and bust cycle is very much ingrained in who we are as human beings. So what I started to do was I started to take my understanding of psychology and human behavior and weave it into the markets. And the ideas and principles and strategies I learned in psychology, I started to apply to my own trading. And those same principles work. So what I'm going to do is I'm going to share my theories on the boom and bust cycle, as well as the human psychology and how you can start to break out of it. Okay, now, so in terms of the boom and bust cycle, it tends to look something like this, right? You've got a trader who starts to do quite well, and they start to make some profit, and they puff themselves up into this state of feeling invincible. And everybody's been in this part of the journey where they think they've got it all figured out and they know exactly what's gonna happen next. They know exactly what to do as traders. And they start trading and trading and trading. They get good results. They're profitable and they're very happy with their results. They're very proud. And then they get a little bit complacent. They start to take low quality setups. They start to minimize the risk in the market. And then they start to, guess what? They start to take some losses because now they're forcing ideas onto the market. And eventually they go so far into this state of shame or depression or resentment or anger, this negative state, that they start to reevaluate their decisions and their behaviors. And they start to realize that, you know what, as a trader, I just need to focus on these quality setups. And I really need to focus and stick to what works. And they do that. They start to become very present with the market. They start to listen to the market. And they start to only trade the highest quality setups. And then as a result, they start to get better and better results. And guess what? That same cycle repeats. It goes on and it goes on and it goes on. And the boom and bust cycle is very much a representation of the human psychology. And what tends to happen with traders is they don't know how to manage winning. And as a result, they go down into the bust cycle. And they don't know how to manage losing. And as a result, they go into the boom cycle. As opposed to traders who have mastered their psychology, they understand human psychology, they understand how the market works, and they can do what is called transcending the boom and bust cycle, which is what I'm going to share with you in this video. But just to give you a better overview, this is a representation of the boom and bust cycle, like I ran through. Taking a few wins, puffing yourself up into a state of pride, into this state of invincibility. And when you feel invincible in the market, you start to then minimize the risks. You start to project your own ideas onto the market, not listening to the market. You hear me talk a lot about outcome-based thinking. You hear me talking about getting caught up in the virtual market and forcing your ideas onto the real market. This tends to happen in this situation where you're in this state of coming off a winning streak, feeling invincible, feeling proud, feeling puffed up and exaggerated because of that. And then as a result, you start to take loss, 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 loss. And then you go into this bust cycle. So you have boom, and you've also got bust. And then eventually you get so far in the bust cycle that you realize what's most important is sticking to your trading plan and only trading the quality setups when the market presents the opportunity. And then you go again into the boom cycle. Like I mentioned, this just keeps on going on and on and on and on. And it continues to go on and on until you learn to master your trading psychology and until you learn to have what is called self-governance. Now, in this type of situation where you're reacting to the external market, you're reacting to winning and losing, you're getting proud when you win and you're getting shamed when you lose. That, in this type of situation, is an example of someone who's being run by the market. They're not governing themselves, they're being governed by the market. This, in simple terms, is what I would classify more of an amateur trader, a trader who's being run by the market. Whereas a professional trader, a trader who's consistently profitable, is one that governs themselves. And if they are to take a win in the market, they have questions and they have protocol to be able to ground themselves and keep themselves humble. And if they take a loss in the market, they have questions and protocol to humble themselves or to lift themselves back up so they get back to a state of equilibrium. So let's draw this a little bit differently. These boom and busts, more in terms of a more realistic equity curve. So a trader who is stuck in inconsistent results is one who doesn't know how to manage themselves. They're being run by the market. Whereas a trader who is achieving consistent profitability is one who, when they take a win and they're feeling that elated, positive emotion of self-exaggeration, they're reminding themselves in the back of their mind the risks of that. They're reminding themselves that if I'm in a state of self-exaggeration, I'm not listening to the market. I'm more likely to force low-quality setups onto the market. I'm not trading my trading plan. I'm less teachable. I'm less open. I feel like I've got it figured out, so I'm not as open to growth opportunities. I'm less likely to study and learn and extract a lesson from this particular situation. So what they're doing in that instantaneous moment is they're grounding themselves. They're keeping themselves humble so they can get back to what is the mean of their results. This here is an exaggerated state. This is a minimized state. And the traders who then take losses, loss, simultaneously that day they're finding the benefits of the loss and they're puffing themselves back up, reminding themselves that they're not that bad after all. And they extract a few lessons from the losses and they maybe make a few refinements to their trading plan. And they realize that losses remind them of the risks in the market and the importance of having accountability to sticking to the higher quality setups in their trading plan. So it's a little bit of a check-in to ensure they're sticking to their trading plan. And they're getting themselves back to this state of equilibrium. Because if you're a trader and you're in a state of self-exaggeration, you're going to minimize the risks in the market. And what you're doing is you're puffing yourself up and you're more likely to project onto the market your ideas. You're more likely to create ideas in the virtual market and force them onto the market. And in that state, you're not actually listening to your trading plan. You're not trading your plan. You're thinking you can predict what's going to happen next, and you're imposing your own will onto the market. So in a state of self-exaggeration, if you trade from that state, you will not build consistent profitability. And so too, if you're in a state of self-minimization down here, then if the market presents an opportunity in alignment with your plan, you're not going to execute because you're too scared. You've minimized yourself relative to the market. You've got this anxiety, you've got this fear of execution because you don't want to relive the pain of those previous losses. So in both a state of self-minimization and exaggeration, you cannot trade effectively. You can only trade effectively when you're balanced in this state of equilibrium, because in the state of equilibrium, you're neither greedy nor fearful. And you're not, minimizing yourself or exaggerating yourself. You're listening to the market. You're seeing where is the market right now. And then if the market aligns with your trading plan, you execute. So the best traders out there, they're getting themselves back to that state of equilibrium after every single trade, after every win and every loss, to ensure that they can go back to sticking to their trading plan. Whereas amateur traders, when they take wins, they puff themselves up. They go away from their trading plan. When they take losses, they beat themselves up. They don't stick to their trading plan out of fear. When they take a win, they go away from their trading plan, exaggerate themselves, greed, don't stick to their trading plan, and the cycle repeats. And that cycle is what is referred to as the boom and bust cycle. Self-exaggeration, self-minimization, greed and fear, up and down. Why? Because they're not sticking to their plan and their processes. Okay? So in order to break out the boom and bust cycle, really the key to break out the boom and bust cycle is to learn to manage your psychology after winning and after losing, get yourself back to a state of equilibrium, and get back to sticking to your trading plan. And it's as simple as that. It's as simple as that. So this is why you hear me talk about a lot on this YouTube channel about this whole idea of outcome-based. Traders who are caught out in outcome-based thinking are trying to seek after the pleasure of winning, and they're trying to avoid the pain of losing. Right? And what ends up happening is they seek after the pleasure of winning, and then because of the probability model as a trader, they eventually take losses, and then they think, what's wrong with me? I'm a terrible trader, or what's wrong with me? And they get stuck in this cycle of boom and bust, inconsistent results, because they're caught up in outcome-based thinking. Whereas traders who have learnt to manage their psychology and they've transcended that dynamic and go to what I call process-based thinking, where they're unencumbered by the outcome of a trade. They don't care about the outcome of a trade because they know it's not about the outcome of the individual trade. And they start thinking in terms of a larger sample space, and they focus on executing their trading plan over a larger sample space, irrespective of the outcome. Those are the traders who build consistent profitability. So this is why I created the free Bulletproof Your Mindset tool. It's the first link in the description. Make sure you download that and use that if you haven't already. And that Bulletproof Your Mindset tool helps you go from outcome-based thinking to process-based thinking. It helps you start to transcend the addiction to a certain outcome or a certain expectation so that you can stick to your trading plan over a larger sample space. You can have consistent profitability. Okay? So just to clarify, amateur traders, because they don't know how to manage their psychology, pride and shame, exaggeration, minimization, same things, I mean the same things. They don't know how to manage winning and losing. They get stuck in this cycle of up and down. I'm happy, I'm sad, I'm elated, I'm depressed, I'm winning, I'm losing. And it's pretty easy to see these traders. One week they message you about how successful they are. The next week they message you about how unsuccessful they are. And then the next week they message you about how successful they are. And I'm not interested in those types of oscillations. I'm interested in helping traders become consistently profitable over a long period of time. And the only way you can do that is by transcending outcome-based thinking entirely, to transcend the boom bust cycle. Okay? I hope that makes sense. It's a very key understanding to have as a trader when you really want to start building consistent profitability long term. Okay. Now, that's an understanding of the boom and bust cycle relative to your psychology and your mindset. One of the most key tools that I have that helps traders start that process of transcending the boom and bust cycle is that free Bulletproof Your Mindset tool in the description. There is also what I call the 4 steps to consistent profitability. The 4 steps. And you really want to make sure you go through this checklist and you tick each of these steps because all of them are essential. And I observed these 4 steps after, I put these 4 steps together after observing thousands of traders and seeing what makes the good ones and what, kills the bad ones. And the good ones, all of them have these 4 steps. The first step here is you need to have a profitable edge. You need to have a profitable edge. There's no point trying to work on your psychology if you don't actually have a profitable edge in the first place. And you can do this by, you can learn an edge from someone, an educator, or you can create your own edge. If you have more experience and you have more exposure, typically you'll probably do a bit of both. You'll learn far and wide, and then eventually you'll probably create your own edge or your own little nuances to the strategies you've learned, which is ideal because it's more molded around your personality. And then once you have a profitable edge, you need to put that profitable edge into a mechanical trading plan. Because your goal once you have an edge is to consistently show up at the market and consistently execute on that edge. Now, how can you consistently execute on an edge if your edge is discretionary or it's not put into a mechanic step-by-step process? So you need to have a mechanical plan. Okay? So create or learn a profitable edge, put that profitable edge into a mechanical trading plan, and ensure that you have each of the components you need. You need an entry, you need an exit point, you need to know how you're managing the position, you need to know your risk management. And I'm going to have a free tool in the description, which is my 6-figure trading plan template. It's completely free. It shows you exactly what you need to have in your mechanical trading plan, from entry to risk management, everything in between, so that when you come to the market, you know exactly what you're doing at every stage of the journey. You cannot expect consistent profitability unless you're consistently executing on your trading plan. And don't expect to consistently execute on a trading plan if your trading plan has all these holes and has all these levels of discretion and has all these issues with it. Of course you're going to be emotional in the market. Of course you're not going to know what to do. Now, once you have your edge and your trading plan in place, then you need to work on your mindset. Because once you have your edge in a mechanical trading plan, then the one thing that's going to stop you from consistently showing up and executing on that trading plan is your mindset. It's yourself. And there are really two components that I've found to the mindset relative to trading. The first one is your mindset prior to trading. These are your expectations. And really these two things are entangled. But prior to trade, your expectations. Because if you have a certain expectation on the outcome of a particular position, then what's going to happen is you're going to have confirmation bias to only let in information that supports that belief. You're going to have disconfirmation bias to block out anything that runs counter to that belief. And you're not going to see the market for what it truly is. You're going to be seeing the market for how you want to see it relative to your beliefs and expectations at that point in time, which is a sure way to not build consistent profitability. So this is why I created the Bulletproof Your Mindset tool, to help you ground the expectations you're holding on to before you trade and to help you get back to your trading plan. Bam. Now, the other part of your mindset is what I call the subconsciously stored associations around winning and losing, or good and bad. And what happens in your mind is you've got certain associations based on your previous experiences with winning and losing and with trading and with relationships and schooling and sport that are logged in the subconscious mind. And after you take a trade, if you take a win or if you take a loss, what tends to happen is those wins or losses remind you of all the stuff stored in your subconscious mind, and you have a reaction as a result. It's a trigger. And it brings to surface a lot of the pain around losing or the pleasure around winning, and it resurfaces. And this is why some traders are very emotional after they win and after they lose. A large part of it is the expectation before, but a big part is very much, and I see this a lot with coaching clients, the experiences they have stored in the subconscious mind that they haven't addressed. So these are the two components you have to learn to master in the human psychology. Your expectations before, and then really after you take a trade, you have to have a process to be able to neutralize the emotional charge around winning and losing. Okay, I cover this in the 12-week program in detail, and this is a free tool you can download in the description. Now, the final step for the 4 steps of consistent profitability is, now that you have your edge you've got your trading plan in place, now you've got your mindset in place that allows you to consistently stick to that trading plan. You now need to structure your life in a way that allows you to come to the market and consistently execute on your trading plan with that balanced state of mind, that state of equilibrium in your mind. These two tools will help you have equilibrium in your mind. These two things here will help you have an edge in the market. Now it's all about ensuring that you have a life structure as simple as a calendar, or you've organized your work, your relationships, your health and fitness time, your learning time, and you've structured your life into some sort of structure and calendar that allows you to come to the market and consistently execute on your, number one, your trading plan with the mindset. Number three, allows you to consistently come to the market and execute your trading plan with a balanced state of mind, and you've got that structured into your life so that your other areas of life, your relationships, your health, your work, your finances, your social leadership, or your mental, your studies, your education, doesn't stop you from going off and actually now adhering to your edge. So I found these to be the 4 steps to consistent profitability, and really the 4 steps also to breaking out the boom and bust cycle. If you tie this understanding in with just the previous understanding I gave you on the boom and bust cycle, it's going to help you understand your own psychology, and it's going to help you understand what you can start to do to start to break out the boom and bust cycle. Okay? If you found this useful, please like, comment, and subscribe, and I look forward to seeing you in the next video.